Those against? Chairman?
I declare the motion carried.
Members, a number of proxies have been received, and a proxy register is available for inspection outside in the foyer if you are so interested. We'll now ask that our President and Group Chief Executive Officer, Mr. Patrick Hilton, address the meeting. And he will be followed immediately by our Group Chief Financial Officer and Deputy Chief Executive Officer, Mr. Dennis Cohen.
Chairman Michael Leachin, Directors of NCB Financial Group, Executives of NCB Financial Group and its subsidiaries, or shareholders, however participating, whether here physically present or through the World Wide Web, members of the media, other stakeholders, ladies and gentlemen, good morning. This morning, as I was lying in my bed at about 3:30, awake, I decided that the presentation that I had previously prepared for this meeting I would not use. And I decided as well that I wanted to go in a particular direction on this occasion because I think it is important for our stakeholders to understand what drives us and what sustains us in terms of our performance. And so, you all know me well enough. I want to start with a quotation, one which you have probably heard me say previously, I don't recall, I know some have, and one which you will hear me say again and again in the future. I keep repeating it because it very succinctly captures who we are, our attitude, and our philosophy. In any event, as someone once remarked, and I can't remember who to attribute it to, repetition never spoils a good prayer, never spoils a good song, and it certainly never spoils a good quotation. And so once again, I want to quote the words of the American architect Daniel Burnham when he said, and I quote, "Make no little plans, they have no magic to stir men's blood. Make big plans, aim high in hope and work, recognizing that a noble, logical diagram, once drawn, will never die, but long after we are gone, will be a living thing and keep on asserting itself with ever-increasing insistency," end quote. The year ended September 30th, 2017, had a number of very interesting highlights for our group. Our focus as a management team continued on the execution of our strategic plan dubbed NCB 2.0, faster, simpler, stronger. Under the theme of raising the bar, we continued our relentless focus on three major areas: expanding in key markets overseas, reinventing our business, and thirdly, the implementation of our digital agenda underpinned by the Agile methodology. Among the highlights I want to share with you today for that period was the creation early in the year, with your support, of the NCB Financial Group. This move has facilitated, as we said it would, our rapidly scaling up our acquisition activities, first through our gaining, as the chairman mentioned previously, a majority stake in Clarion in Bermuda, and secondly, in enabling us to make a bid for majority control of Guardian Holdings Limited. We also accelerated our digital agenda through a number of initiatives and activities, including becoming the first bank in the English-speaking Caribbean to launch a digital lab. We have launched several since that, and for the coming year, our focus will be to seriously engage our digital ambition of becoming agile at scale. Along the theme of reinventing our core business, we executed a number of initiatives and activities in payments innovation, in credits, in all the core areas of the bank's business. For 2018, we will continue to deepen and broaden these actions as we implement new programs designed to improve and sustain our performance. The results of our approach to managing the business speak for themselves. To borrow the Latin expression, they are res ipsa loquitur, which translated means the thing speaks for itself. And so, ladies and gentlemen, let me go to a particular highlight which is of great importance to me. So by the end of the third quarter, we had surpassed our record performance the previous year of $14.4 billion in net profit after tax. At the end of the third quarter of the 2017 year, our net profit after tax was $14.7 billion. You're not pleased? And by the end of the year, we had established a new record, an all-time high of $19.1 billion. We just wanted to push that. So I wanted to share today sometime giving you more specifics and insights into what has driven and sustained our performance over the years. And very importantly, what will underpin and ensure that we continue on that path in the future. We, as the leadership of the business, have adopted, after much research, a framework for organizational performance known as the 5 A's framework. It is a framework that was developed by two of renowned consultants, a gentleman by the name of Scott Keller and another gentleman by the name of Colin Price. We are convinced that its successful adoption, enabled by the right culture and attitude, will ensure sustainable success. We agree with the developers of the framework that successful organizations need to focus on two components. One is performance, which is really about delivering financial and operational performance on a continuous basis. But the second one is about health, which is really the ability of the organization to adapt and to renew itself on a continuous basis. So that's where the focus is. And so, in terms of the development of strategy, we start, as always, with an aspiration. And what the aspiration for us, ladies and gentlemen, really answers the question, where do we want to go? One of the important components, or one of the important attributes of an aspiration is that it must be unreasonable, but not unachievable. It is important that it is unreasonable because, as I think it was Will Smith said, being realistic is the most common path to mediocrity. And so we recognize that if we want to achieve great things, then we have to start with great ambition. And Mr. Narayan Murthy, one of the founding members of the global giant Infosys out of India, once remarked about the importance of an aspiration in enabling and sustaining success by making the point that an aspiration really galvanizes people and it converts ordinary people into extraordinary achievers. And so we focus on an aspiration on the performance side, but we also have an aspiration on the health side, which is particularly important because it is, at the end of the day, it is people who execute. So that's the first A, to aspire. The second A is to assess. And this really answers the question, how ready are we to go there? How ready are we to embark on and to execute on the aspiration? And again, a very important part of this, of course, is our focus on the financial and operational levers. But more importantly, is our focus on ensuring that our people have the skills, capabilities, and competencies to carry out the various functions and initiatives that are required, but most importantly, they have the right mindset. That is what sustains performance, mindset. The third A is to architect. And that really answers the question, what do we need to do to get there? And so we develop a portfolio of initiatives designed to improve performance, while at the same time architecting the implementation of initiatives that drive people to move and to support us in that direction. The fourth A is to act. And this is where many fail. They make all the plans in the world, but they don't execute. And this really answers the question, how do we manage the journey? Designing the approach, rolling out the various initiatives, executing on them, and within the health context, ensuring that there's broad ownership, taking a structured approach, and making sure that there's alignment in terms of the benefits coming from impact. And then the fifth A is to advance. And this answers the question, how do we keep moving forward? By setting up mechanisms to drive continuous improvement. And on the health side, by developing leaders to enable them to drive change and to be the change that we want to see in our business. I also mentioned that the implementation of the 5 A's, as important and as impactful as it is, can be enhanced by creating and sustaining within our organization the right culture, the right organizational culture. And so, to ensure that we are building and creating and sustaining the right culture, we also did research looking at companies that have built great culture and sustained it over a long period of time. And we have adopted a framework from one of the most successful digital natives in terms of our focus on organizational culture and renewal. There are 4 components to this framework. The first component is described as true customer obsession. In other words, a relentless focus on how we can improve and enhance and sustain the customer experience over a long period of time. The second component is building a culture which manages against the risk of managing to proxies. In other words, where the focus is on outcomes and not whether or not the process was observed or this was followed or the survey gave this particular outcome, right? We are focused on impact. We want people to say whether or not it works. Did people get the desired outcome and the desired result? And not so much so whether they followed the policy or the procedure. I'm not advocating that people should disregard policy or procedure. I'm simply saying that if you're following policy and procedure and it is not sufficiently impactful, then we need to address it. That's all I'm saying. The third one is high velocity, high quality decision making. We are saying, if I adopt the principle that says justice delayed is justice denied, so too is value. Value delayed is value denied. And so we have to put in place systems and programs and strategies and initiatives which facilitate high quality decision making with high speed. And that is what the adoption of Agile is about, and the relentless focus that we are giving to Agile in terms of specific initiatives, and as I mentioned before, our commitment to transforming to an organization which is Agile at scale. And then the fourth one is about embracing external trends, because we recognize that change is inevitable. But a lot of times, we are inherently or intuitively resistant to change because we're uncomfortable with change. We are creating a culture and an environment that embraces change, that recognizes that change often creates new opportunity and new advantages, and that resisting the inevitable is ultimately folly. So we are really focused on working on our culture to ensure that it adapts to these four modalities I've just outlined. We want to drive that type of behavior deep and thinking and philosophy deep within our organization so that people intuitively respond to circumstances in those ways. And I know that change for many is difficult. But one of the things I found is that if you adopt an attitude where you welcome and embrace change, it becomes easier. I once saw an article which said change is good, you go first. So I understand the hesitation and so on. And so, like I said this morning, I had initially planned to spend a lot of time talking about specifics of our performance over the year. But my colleague Dennis Cohen will do a lot of that when he goes through the numbers. What I wanted to share with you today, this morning, is the thinking, the philosophy, the attitude, the culture, which is driving our success, which we are working to improve and to drive deeper in our business, and which we expect to sustain us over the long term. And so, ladies and gentlemen, I want to close, as I started, with a quotation, again, this time from T.E. Lawrence of Arabia, when he said that all men dream, but not equally. Those who go to bed late at night in the dusty recesses of their mind dream and awake to find that it was vanity. But the dreamers of day are dangerous men in that they act on their dreams to make them real. End quote. We, ladies and gentlemen, are the dreamers of day. We act on our dreams and we make them our reality. Thank you very much.
Good morning. Good morning. Okay. Chairman, Michael Leachin, fellow directors, shareholders, participants joining us via the web streaming, media representatives, analysts, my fellow NCB colleagues, ladies and gentlemen. Welcome to our 2018 Annual General Meeting. As Patrick mentioned earlier, I will first outline details of our financial performance for the 2017 financial year, and then I'll share highlights of the first quarter of the current year. This is the first full year results as the NCB Financial Group. The record results achieved for the financial year can be characterized by saying we had robust asset and capital growth. Our asset base grew by 14%, and our equity improved by 13%. This was attained through continued focus on strengthening our core business. Steady growth in our loan and deposit portfolios resulted from our focus on sales and service and payments innovation, which are all important pillars in our strategy. We achieved commendable revenue growth in our core activities and also share of profits from our associates. The more than threefold growth in share of profits from our associates was attributed to a one-year share of profits from Guardian Holdings as opposed to 1 quarter in the prior year. This growth in our core revenues, along with the improvements in the share of profits of associates, have translated into a 27% increase in profit before tax. Also of note for the year was the improvement in shareholder returns, which when you look at the dividend yield compared to the growth in our stock price. In addition to that, we would have continued to show consistent dividend payments, and the payments throughout the year totaled $2.70. All our business segments improved over the prior year. Our treasury and correspondent banking business continued to be the largest contributor to operating profits, with results of $7.9 billion, increasing 36% over the prior year. Our retail and corporate banking segments grew by 20% and 37% respectively, and given the competitive landscape and declining interest rates, this was no small feat. Their improved performance was driven primarily by loan growth. Our payment services segment increased year over year by 41%, resulting from enhancements in our card products and increased merchant acquiring and cardholder transactions. Our wealth management segment increased by 15%, and benefited from increased revenues from our investment banking and structured product services, reflecting growth in the investment banking market. Over the past 10 years, we have increased our revenues at a compounded average growth rate of 11%, and our total revenues for 2017 was $59.5 billion from $20.5 in 2007, as reflected in the chart on the screen. As was mentioned earlier, we are pleased to have achieved our highest ever net profit of $19.1 billion. Our net profit grew by $4.7 billion, or 32% over the prior year, and compares favorably with the prior year's growth, which was 17%. We also enjoyed a 14% increase in assets, and I'd say without sacrificing asset quality, and we consistently met our regulatory requirements. There is a 13% increase in equity, which reflects our consistent capital retention policy. Also of note, our net assets and deposits also improved over the prior year by 16% and 5% respectively. In addition to retaining our number one position in Jamaica, we are particularly proud of being ranked number 4 in the region based on pre-tax profits. As confirmed by the Financial Times Limited, it was our aspiration to be within the top 5 financial institutions in the region, and this metric offers independent validation of our progress. Our key performance indicators, return on asset and return on equity, increased to 2.9% and 17.4% respectively. Our earnings per share is up 32%, consistent with the increase in net profits, and our cost-to-income ratio improved marginally to 63.2%, up from 63.7%. Operating revenues increased by $9.9 billion, or 19%, while our operating expenses grew by $4.8 billion, or 14%. The largest contributor to growth in operating revenues was a $3 billion increase from investment activities and foreign exchange income. Revenues were positively impacted by higher net fee and commission income from growth in our loan portfolio and increased transactions through our e-commerce and point-of-sale channels. Additionally, our investment banking, pension fund management, unit trust businesses have all performed well relative to the prior year. As mentioned earlier, share of profit of associates increased by $2 billion, reflecting 4 quarters' earnings from the Guardian Holdings compared to 1 quarter in the prior year. Net interest income increased by $1.6 billion, driven by loan growth coupled with effective management of our interest margins. These revenue improvements were partially offset by a 14% or $4.8 billion increase in operating expenses. Most significant being, as the chairman mentioned earlier in the definition of NCB, being a $2.9 billion increase in staff costs stemming from negotiated increases and, most importantly, incentive payments paid during the year. Other operating expenses grew by $1.5 billion, driven by investments in technology, to enhance our digital capabilities. Finally, looking at capital across the group, we continue to maintain ratios compliant with the regulatory requirements. Ladies and gentlemen, that wraps up the review of the 2017 performance, and I will now outline highlights of our first quarter for the current financial year. Let me begin by stating that in December, we consolidated our newest subsidiary, the Clarion Group Limited, based in Hamilton, Bermuda, having completed the acquisition of a 50.1% majority stake. The acquisition resulted in a gain in negative goodwill on acquisition of $1.5 billion. We are pleased to report net profits, as was released yesterday, of $4.6 billion, another record for our first quarter. The reported profit represents a 28% or $1 billion increase over the prior year's first quarter and $223 million or 5% above the previous September quarter. This is a commendable start to the financial year in the context of a $1.4 billion asset tax and over $600 million separation costs incurred following changes in our branch operating model. The improved performance in the December 2017 quarter was driven by a 17% growth in operating revenue over the prior year, achieved mainly from higher gains from investment and foreign exchange activities, which is up $1.4 billion or 83%. Loan growth also resulted in increased net fee and commission and also interest income. The improved net profits have positively impacted our main performance indicators. Return on assets grew from 2.3%, and return on equity improved to 15.7% from 15.4%. 31% rise in operating expenses was primarily driven by staff-related expenses, causing a deterioration in our cost-income ratio from 69.5% to 78%. These charges are one-off items, and therefore we anticipate that this ratio will improve during the course of the year. Our treasury and correspondent banking continues to be the largest contributor to operating profit, now followed by our life insurance and then our wealth management segments. For the period, two of our business segments reported losses. Our retail banking segment with over $600 million in redundancy costs, while our general insurance segment had accelerated claim payments in excess of $1.1 billion compared to what would normally be just about $600 million. We expect these segment performance will normalize in the coming quarters. Total assets closed the period at $856 billion, reflecting the consolidation of Clarion, while our shareholders' equity was $119 billion, up 16% from the prior year. We continue to be well capitalized, and all our capital ratios are above the regulatory requirements. Ladies and gentlemen, as was mentioned, we are in year 2 of our strategic plan to reimagine financial services and transform to the new improved NCB 2.0. Faster, simpler, stronger. Our intention is to continue to strengthen our core business and create innovative digital solutions for our customers. Ladies and gentlemen, we believe This will enable us to deliver sustainable results and assure a successful 2018. We thank you for your continued support, and again, thanks for sharing my thoughts.
Thank you, Mr. Hilton and Mr. Cohen. We will now proceed with the formal and required business of the meeting. The first item being the presentation of the audited financial statements. Those having been circulated, I will now call on Mr. Garfield Rees of PricewaterhouseCoopers to read the auditor's report. It's going to take a while, so he's going to do it sitting.
Morning, ladies and gentlemen. Dave, thanks for your first act of kindness towards me all these years I've known you. Independent Auditor's Report. To the members of NCB Financial Group Limited, report on the consolidated and standalone financial statements. Our opinion. In our opinion, the consolidated financial statements and the standalone financial statements give a true and fair view of the consolidated financial position of NCB Financial Group Limited, the company, and its subsidiaries, together the group, and the standalone financial position of the company as at 30 September 2017, and of their consolidated financial performance and their consolidated cash flows for the year then ended, and the standalone financial performance and standalone cash flows for the 18 months then ended in accordance with International Financial Reporting Standards, IFRS, and the requirements of the Jamaican Companies Act. What we have audited. NCB Financial Group Limited's consolidated and standalone financial statements, which comprise the consolidated income statement for the year ended 30 September 2017, the consolidated statement of comprehensive income for the year ended 30 September 2017, the consolidated statement of financial position as at 30 September 2017, the consolidated statement of change in equity for the year ended 30 September 2017, the consolidated statement of cash flows for the year ended 30 September 2017, the statement of comprehensive income for the 18 months ended 30 September 2017, the statement of financial position as at 30 September 2017, the statement of change in equity for the 18 months ended 30 September 2017, the statement of cash flows for the 18 months ended 30 September 2017, and the notes to the financial statements, which include significant accounting policies. Basis for opinion. We conducted our audit in accordance with International Standards on Auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the consolidated and standalone financial statements section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for opinion. Independence. We are independent of the group in accordance with the International Ethics Standards Board for Accountants Code of Ethics for Professional Accountants, referred to as the IESBA Code. We have fulfilled our other ethical responsibilities in accordance with the IESBA Code. Our audit approach. Audit scope. As part of designing our audit, we determined materiality and assessed the risk of material misstatement in the consolidated and standalone financial statements. In particular, we consider where management made subjective judgments. For example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all our audits, we also assess the risk of management override of internal controls, including, among other matters, consideration of whether there was evidence of bias that represented a risk of material misstatement due to fraud. Key audit matters. Key audit matters are matters that, in our professional judgment, were of most significance in our audit of the consolidated and standalone financial statements of the current period. These matters were addressed in the context of our audit of the consolidated financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on those matters. In relation to the standalone company, we have determined that there were no key audit matters to communicate in our report. Key audit matter: reorganization of the NCB Financial Group Limited. See notes 1, 2A, and 3 to the consolidated financial statements for management's disclosures of related accounting policies. During the year, National Commercial Bank Jamaica Limited, NCBJ, underwent a reorganization which resulted in NCB Financial Group Limited, NCBFG, as a new parent company for NCBJ, in comparison to the prior financial year when NCBFG was controlled by NCBJ and was consolidated in the financial statements of NCBJ accordingly. The reorganization was effected in March 2017 under a court-sanctioned scheme of arrangement where the previously existing shares in NCBJ were cancelled, with new shares of equal amount in NCBJ being issued to NCBFG. NCBFG then issued shares on a one-for-one basis to all previous shareholders in NCBJ. On completion of the reorganization, each shareholder in NCBFG had the same number of shares held in NCBJ prior to the scheme of arrangement. In assessing the transaction, management considered that there was no change in the control of the group before and after the transaction. Management determined that the use of the predecessor method of accounting is the most appropriate method to be used in the circumstances. In applying the predecessor method, management presented prior period comparatives at pre-organization carrying amounts, and in the current year, presented a full year's financial results, even though the reorganization took place during the current financial year. The accounting for the reorganization and the presentation of the financial statements were areas of focus because of management's judgment in determining the accounting treatment. How our audit addressed the key audit matter. We obtained an understanding of management's position as well as examined their proposed accounting policy treatment. We compared management's policy and assumption of no change in control against the criteria of IFRS 3 and IFRS 10 and did not identify any contradictory conclusions. We examined the original legal documents which gave effect to the reorganization and confirmed that the necessary approvals were obtained, as well as assess the terms of the scheme of arrangement to support the conclusions of a management's judgment supporting no change in control. We did not identify any information that contradicted the accounting policy. We also evaluated the adequacy of the presentation of the financial statements and related disclosures to ensure that the reorganization was sufficiently described and that the basis of the presentation was appropriate based on management's accounting policy. We found no exceptions. Impairment losses on loans and advances to customers. See notes 2J and 21 to the financial statements for management's disclosure of the related accounting policies, judgments, and estimates. As of 30 September 2017, loans and advances, net of provision for credit losses, represented 218 billion or 32% of the total assets of the group. IFRS determined impairment provisions of 3.7 billion have been recognized for the group. We focused on IFRS determined impairment assessment as the assumptions used for estimating both the amount and timing of future cash flows are complex and involve significant judgment by management, including classification of loans as impaired. We focused on management's identification of the customer accounts that are included in the impairment assessment from a completeness perspective. Valuation of real estate property pledged as collateral. This is the most significant repayment source for impaired retail and impaired commercial loans. The estimation of collateral values is impacted by market trends as well as the circumstances of a specific property and involves judgment and specialized skill. The key assumptions and judgments made by management when calculating the provision for individually impaired loans. Key assumptions and judgments include the estimated cost to sell the collateral, time to liquidate pledge collateral, and the amount and timing of collection of cash flows from sources other than pledged collateral. how our audit addressed the key audit matter. We assessed and tested the design and operating effectiveness of the controls over impairment data and calculations. Those controls included identification of which loans and advances were impaired. We determined we could rely on these controls for the purposes of our audit. We evaluated management's process by testing a sample of loans and advances which had not been identified by management as potentially impaired and formed our own judgment as to whether that was appropriate. The criteria we used to determine if there is objective evidence of impairment included significant financial difficulty on the part of the borrower, default or delinquency in interest or principal payments, concessions granted to a borrower that would not otherwise be considered due to the borrower's financial difficulty, the probability that the borrower will enter into bankruptcy or financial reorganization, or observable market data indicating that there is a measurable decrease in the estimated future cash flows from the loan portfolio since the initial recognition of the loans. Based on the testing, no adjustments are considered necessary. Where impairment had been identified, we inspected the forecast of future cash flows prepared by management to support the calculation of impairment, testing the assumptions and comparing estimates to external evidence where available. Management uses valuation experts to support the estimate of future cash flows from the asset, including the realization of collateral held. Using a risk-based approach, we engage our expert to perform independent valuations of commercial and residential properties held as collateral. Based on the testing performed, no adjustments were necessary. We tested the completeness of management's listing of potentially impaired loans by reperforming the process using management's impairment criterion. No differences were noted. Where an impairment provision had been identified by management based on the expected default rate against performing loans by sector, we evaluated the default rate model and compared inputs to relevant data, including historical loss experience for loans with similar risk characteristics. We also checked the calculations for mathematical accuracy, noting no exceptions. We evaluated the performance of the loan portfolio subsequent to the end of the reporting period to identify any significant adjusting events subsequent and did not identify any such events. Valuation of investments classified as fair value through profit or loss, available for sale, and loans and receivable and pledged assets. See notes 2K, 19, 22, and 23 to the financial statements for management's disclosures of related accounting policies, judgments, and estimates. As of 30 September 2017, investments classified as investment securities at fair value through profit or loss, available for sale, and loans and receivable and pledged assets together account for 301 billion or 43% of the total assets of the group. For some of the investments, an active market exists from which quoted prices can be obtained. For others, management uses valuation techniques which utilize inputs such as investment cash flow details and a market yield obtained from established yield curves. The magnitude of this balance, the complexity of the models used, the use of management assumptions, and the potential for misstatement from the use of inappropriate yields from the yield curve resulted in this being an area of focus. How our audit addressed the key audit matter. For investments for which quoted prices were available, we compared prices used by management to independent pricing sources, no exceptions identified. For investments which were valued using a valuation technique, we tested management's valuation for a sample of the individual investment holdings by comparing investment cash flow details and yields to independent pricing and data sources, including externally independently developed yield curves. We evaluated management assumption in relation to the timing and amounts of cash flows in relation to the sample of investments by considering any indicators to suggest that there may be variations to the contractual cash flows expected. We recalculated the fair value and amounts disclosed for the fair value of the group's investments for mathematical accuracy and noted no exceptions. Based on the testing, no adjustments were considered necessary. Valuation of incurred but not reported claims for property and casualty contracts. See notes 2T and 34 of the financial statements for management's disclosures of related accounting policies, judgments, and estimates. As at 30 September 2017, total incurred but not reported reserves account for 1.9 billion or 0.3% of the total liabilities of the group. The methodologies and assumptions utilized to develop incurred but not reported reserves involve a significant degree of judgment. The liabilities are based on the best estimate ultimate cost of all claims incurred but not settled at a given date, whether reported or not, together with related claims handling costs. There is generally less information available in relation to these claims, which can result in variability between the initial estimates and final settlement. A range of methods may be used to determine these provisions. We focus on this area because underlying these methods are a number of explicit and implicit assumptions relating to the expected settlement amount and settlement patterns of claims, and the values determined are subject to complex calculations. How our audit addressed the key audit matter. We tested the completeness, accuracy, and reliability of the underlying data utilized by management and their external actuarial experts to support actuarial valuation. Our test did not identify any exceptions. We were assisted by actuarial specialists who performed a review of the actuarial evaluations done by the group's actuary. In reviewing the calculation, we evaluated the assumptions used by management and assessed the methodologies used for appropriateness and consistency with established actuarial practice and with methodologies used in the prior year. The assumptions used by management were found to be reasonable and the methods applied appropriate in the circumstance. Methodologies and assumptions used for determining insurance contract liabilities for life insurance and annuity insurance contracts. See notes 2T and 34 to the financial statements for management's disclosures of related policies, judgments, and estimates. As at 30 September 2017, risk reserves for life insurance and annuity contracts account for $3 billion or 0.5% of the total liabilities of the group. We focus on this area because the valuation of provisions for the settlement of future claims involves complex and subjective judgments about future events, both internal and external to the group, for which small changes in assumptions may result in significant impacts to the valuation of these liabilities. How our audit addressed the key audit matter. We tested the completeness, accuracy, and reliability of underlying data utilized by management to support the actuarial evaluation. We tested a sample of contracts to assess whether contract features and demographic data corresponded to the data file given by management to its actuary. We engaged an actuarial specialist to evaluate the methodologies and assumptions utilized by management's actuarial expert, considering industry and component-specific facts and circumstances. Specific areas of focus were mortality assumptions, contract lapses, investment return, and associated discount rate and operating expenses, all of which are based on entity experience or publicly available information. We found the significant estimates and assumptions used by management to be reasonable and that the methodologies used were actuarially established and accepted and appropriate in the circumstance. Impairment assessment for the group's holding in associated company. See notes 2B, 3, and 24 to the financial statements for disclosures of related accounting policies. As of 30 September 2017, the market capitalization for the group shareholding in one of its associated companies was below carrying value of $29.8 billion as determined using equity accounting. This was considered to be an indicator of potential impairment, which required further consideration by management as to whether a formal impairment assessment was required. Management concluded that an assessment was required and performed a value in use calculation. We focused on this due to its subjectivity and sensitivity to changes in inputs, as the performance of value in use calculation involves the use of estimates, including future cash flow projections, revenue growth rates, discount rates, and terminal growth rates. Based on the results of management's assessment, management has concluded that investment is not impaired. We examined management's assessment of the historical performance of its investment and compared underlying financial data using the assessment to audited financial statements and other publicly available financial information. We were assisted by our valuation expert to evaluate management's value use calculation. We evaluated management's assumptions in relation to future cash flow projections, revenue growth rates, discount factors, and terminal growth rates by forming our own independent expectation, referencing historical entity performance, information, economic and statistical data. Our procedures did not identify any exceptions which would indicate that the investment in an associated company would require an impairment provision. Other information. Management is responsible for the other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statements on our auditor's report thereon, which is expected to be made available to us after the auditor's report date. Our opinion on the consolidated and standalone financial statements does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statements, our responsibility is to read the other information identified when it becomes available, and in doing so, consider whether other information is materially inconsistent with the consolidated and standalone financial statements, or our knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude there's a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the consolidated and standalone financial statements. Management is responsible for the preparation of the consolidated and standalone financial statements that give a true and fair view in accordance with IFRS, and for such internal control as management determines is necessary to enable the preparation of consolidated and standalone financial statements that are free from material misstatement, whether due to fraud or error. In preparing the consolidated and company standalone financial statements, management is responsible for assessing the group's and company's ability to continue as a going concern, disclosing, as applicable, matters related to going concern, and using the going concern basis of accounting unless management either intends to liquidate the group, the company, or to cease operations or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group's and company's financial reporting process. Auditor's responsibility for the audit of the consolidated and standalone financial statements. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if, individually or in the aggregate, they could reasonably be expected to influence the economic decisions of users taken on the basis of those consolidated and company standalone financial statements. As part of our audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism through the audit. We also identify and assess the risks of material misstatement of the consolidated and standalone financial statements whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group's and company's internal control. Evaluate the appropriateness of the accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis, and based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cause significant doubt in the group's and the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the consolidated and standalone financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group or company to cease to continue as a going concern. Evaluate overall presentation, structure, and content of the consolidated and standalone financial statements, including the disclosures, and whether the consolidated and standalone financial statements represent the underlying transactions and events in a manner that achieves fair presentation. Obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statements, we are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our opinion. We communicate with those charged with governance regarding, among other matters, the plan, scope, and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we may identify during our audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirements regarding independence and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence and, where applicable, related safeguards. From the matters communicated with those charged with governance, we determined those matters that were of most significance in the audit of the consolidated and standalone financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure about the matter, or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept so far as appears from our examination of those records, and the accompanying consolidated and standalone financial statements are in agreement therewith and give the information required by the Jamaican Companies Act in the manner so required. The engagement partner on the audit resulting in this independent auditor's report is Garfield Rees. PricewaterhouseCoopers, Chartered Accountants, 23 November 2017, Kingston, Jamaica. I apologize and I thank you.
We can't give you any money because we already paid your fee. Members, the director's report sets out the highlights of the operating results and is included, of course, in the annual report along with the audited financials. And we'd now like to put forward the following resolution as set out in the agenda and in the notice of meeting, which is as follows: that the audited accounts for the year ended September 30, 2017, and the reports of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. Would a member please propose that motion? Thank you. And who is seconding? Thank you, Mr. Ellison. And now we will take questions and comments on the audited accounts. And as usual, please indicate your name and please limit questions and comments at this time to the audited accounts. Yes, sir. Now, there's a light shining at me, so I can't necessarily see who puts up the hands, so I definitely need the names. I think that's Mr. Staple, though.
Yeah, or it's Staple.
Yes, Mr. Staple.
Mr. Chair, fellow shareholders, members of the board, good morning. Mr. Chair, with your permission, I would like to make a few observations before I ask my question. So with your permission, I would be grateful if this could be given to me.
You're welcome, sir.
Thank you very much, Mr. Chair. Mr. Chair, first of all, congratulations to you, members of the board, the employees of our group, and I'm going straight to Junction in St. Elizabeth, Mandeville, Northwood Boulevard, those employees and other employees, the security, for your dedicated and devoted work to our group, enabling us to attain the financial achievement of net profit of $19.1 billion. Let's give them a round of applause. Thanks must be given to our Lord, the God who gives and the God who takes. And we ask that He continues to bless us as a group, as a people, as a country, so that we can continue to give to others of what we have achieved. Mr. Chair, the presentation of the management discussion analysis was one of the best I've seen in years. Congratulations to the team leader and the team members who did this presentation. It was a remarkable effort. As shareholders, we are now able to understand clearly what this company, what this group is all about, both in Jamaica and internationally. Thank you for that presentation. And as I said, God's blessing go with you as a team. Mr. Chair, our group attained significant awards in this country, which goes to show the strength that we have as a group, and we continue to give that strength to this country and to our people in this country. Mr. Chair, your board members did a splendid job. They attended meetings, both of the board and the committee, and the provision, what they gave, helped to give this company, this group, the achievement that we achieved. And I would say congratulations to them and ask them that they continue to do what they are doing so that our group can continue to grow. Mr. Chair, I would like to congratulate Mr. Wayne Chin for the significant work that he did over the years in this group, and ask that God blessing be with him and his family as he goes from us. I would have liked to see, between you, Mr. Chair, and Mr. Hilton and the other members of the board, convince him to come back so that he can continue to share his wealth of knowledge with us as a group. And lastly, Mr. Chair, we appreciate how the asset of this company has grown from strength to strength and continue to be strong. Mr. Chair, my question. In 2017, the past due amount of $63.4 billion was greater than that of $44.9 billion in 2016 by 41.2%. Mr. Chair, a great portion of this was secured, but there was $18.5 billion which was unsecured.
Mr. Staple, I'm sorry, I had forgotten to indicate earlier that when you're ready to start the question, we do need for you to communicate the page reference, the page to which you're referring in the report.
Okay.
So you want to start off with that now, sir?
Okay. If you turn with me to page 250.
Yes. Thank you.
As I said, the past due amount of $63.4 billion exceeded 2016 amount of $41.3 billion by $22.1 billion, or 53.5%. Of this $63.4 billion, 44 billion was secured. How was the risk of the 18.5 billion managed? That was my first question, sir.
Yes, you can hold while we wait for Mr. Cohen to assist with the response.
Mr. Staple,
Yes, sir.
can you repeat what the $18 billion, what's your question?
Yes, 18.5 billion
Yeah.
was the unmanaged portion. How did you manage this risk?
You mean the unsecured portion?
Unsecured
yes.
portions?
The unsecured portion, yes.
No, as is now, Mr. Staple, the security, we have the ability to ask for security when we believe that based on the financial condition of the borrower, there is need for it. To the extent that we don't see that, and to the extent that we believe the borrower has all the means to achieve, to meet his obligations on the loan, there is no need, we don't see the requirement for ask for security, and we don't.
So in your opinion, Mr. Deputy CEO, in your opinion, the 18.5 billion was in good hands, basically.
Yes, sir.
All right? Take your word for it, sir.
Remember, the auditors have signed off on the accounts as well, and they would have done their checks and would have pretty much confirmed our own assessment.
Mr. Chair, to the auditor. Mr. Auditor, impairment provision is a critical aspect of fund management. The default rate model used by both you and the group's management appears to be alike because you did not find any exception. What then can be administered to reduce the line item of impairment, which was 3.2 billion in 2017? How can we reduce this?
That's a question for management, not the auditors, sir.
Yeah.
Well, are you telling me that the management should answer this question then?
I'm telling you that I'm not in a position to answer a question. My responsibility is to audit the numbers that are presented to me. I think you're asking a management function question, and as
Management
auditors,
to you.
we don't perform management functions.
Since the auditor says that they are not responsible to you management,
Mr. Staple, we are in the business of lending. And when you're lending, from time to time, there are customers who may have challenges. We have a unit which is focused on working with our customers who have challenges. We are constantly in communication with these customers, coming up with ways to possibly restructure, probably looking at other assets that they may be able to use to secure their loan borrowings. That's an ongoing process which is pretty much a part of our normal business operations.
so you have recognized that this could be a concern, but you have it under managed.
Yeah, what I'm saying, Mr. Staple, this is banking, and this is a normal part of banking. We would have no impaired loans only if we have zero loans. The important thing to note is that the margins that the organization is making has adequately covered the required impairment charges and providing shareholders with a return that they're satisfied with. So technically, we could have no impairments, we could have no credit losses, but we probably would also have no business. So what I'm saying, the important thing is not the existence of impaired loans, but the extent to which our margins are sufficient and adequately covers any impairment charges, and as I said, provide the shareholders with an appropriate return on capital.
So am I to understand, Mr. Cohen, am I to understand that, yes, we will have impairment, But outside of the impairment, what I'm hearing is that you are managing the funds that you have in your control. So therefore, even if impairment takes place, everyone will be satisfied with the results that we achieve. Am I correct?
Well, the results speak for themselves.
Okay.
Because the fact is that we're discussing the performance of the organization. We have showed you record results, and that is in spite of the impairments that you're talking about.
Okay, sir.
Yes, sir.
If there are any adjustments to this question, then I guess other shareholders will ask it when their time comes around.
No problem, sir.
Mr. Chair, investment securities at fair value,
Page reference, please, Mr. Staple.
page 143.
Thank you.
Investment securities at fair value accounted for 301.0 billion, or 43% of total group assets. Mr. Auditor, you were concerned about the use of management assumptions and the potential for misstatement from the use of inappropriate yields from the yield curve. Why your concern to focus? Why was it your concern to focus on this area of business?
Mr. Staple, firstly, my name is Garfield Reese, so you can refer to me as Garfield or Mr. Reese.
Thank you, sir.
You're most welcome. We focused on investments because of the materiality of the balance, as well as the fact that some of the values for investments are determined using judgment. And that judgment will involve using a yield from a yield curve that management either develops on its own or where it gets information from external sources. In those instances, our responsibility is to ensure that the estimation process and the numbers that are used in the determination of the valuation are referenceable to independently determined values.
So your concern, when you did your analysis, you were satisfied that what you saw and what was being done was in line with what ought to have been done. Am I correct?
As is reflected in my report, yes.
Okay. Mr. Chair, page 217 and page 194. Am I correct, Mr. Chair, in saying that securitization of diversified payment rights is a right of the group to receive payments from correspondent banks based overseas, wherever a payment order is initiated by a person or entity situated overseas in favor of a person or entity situated in Jamaica. Am I correct? Am I correct?
Essentially, yes, Mr. Stable.
Am I correct?
Yeah, that's correct.
Okay. Since I am correct, the net liability under this arrangement was $66.7 billion in 2017 versus $47.9 billion in 2016, an increase of $18.8 billion or 39.2%. With the current portion of securitization obligation for 27 being $10.8 billion, and with technology being the high risk it is, how are we securing our group in this product line, despite the apparent excellent return on investment. How are we preparing ourselves for the security in this business line?
Okay, Mr. Staple, what you're reading, this item regarding diversified payment rights, it is in fact amounts which we have borrowed, not amounts that we are loaning other persons. It is not an exposure that we have to amounts being unpaid, but the persons who have loaned the organization are the ones who are technically at risk. So it's a borrowing and it's not an asset of the group. Now what has happened is that based on the diversified payment rights which we have coming our way, investors have been comfortable to loan us money based on those incoming cash flows. Those investors have assessed the cash flows which NCB expect to get, and they are comfortable loaning us money based on those projected flows. The risk to NCB, I think you're probably not understanding it, but it's not really, there isn't much of a risk to NCB. It is more a risk to the investors who have sought to place money with NCB based on the rights that we have coming over time.
So what I'm understanding, Mr. Cohen, is that securitization is a good asset for us because it is not a risk, as you have rightly said.
No, as I'm saying, it's a liability.
It's a liability.
Right.
And we are saying that we are managing that to the best of our ability.
Absolutely.
And we'll continue to have that as one of our main business lines as far as the group is concerned.
We expect it to continue to be an important source of funding for the NCB group,
So,
just as is the case with deposits and other types of liabilities.
okay, sir, thank you. Mr. Chair, I'll soon be finished. Despite the profit share of 2.1 billion for staff, wages, salaries, benefits increased $2.7 billion. I'm at page 196 and 246, Mr. Chair.
You anticipated well, sir. I was about to ask.
Sorry about that, sir.
Not at all.
So page 196 and 246, those two pages. I'm saying, Mr. Chair, despite the profit share of 2.1 billion for staff, wages, salaries, benefits increased by 2,652,135,000, or 19.2%. Key management, which represents those team leaders, basically. That was up 471.6 million, or 55.9%. Management remuneration was up 288.3 million, or 82.3%. And when I speak of management remuneration, I'm speaking of those executives who are on the board. 2, shareholders was never considered increasing. We were expecting, Mr. Chair, remember now, all these amounts that I quoted represents expenses to the bottom line. So these expenses reduce the gross profit, giving you the 19.1 billion net profit. Am I correct?
You're correct, sir.
Okay. Now, if all of those expenses reduce that bottom line to 19.1 billion, as shareholders, we were expecting out of that 19.1 billion, because dividends are not expenses. Am I correct?
That's correct, sir.
Okay. So a dividend is not an expense. We were expecting, Mr. Chair, at least a doubling also of our dividend. So we were expecting for the quarter, Mr. Chair, $1.20. Remember now, Mr. Chair, this is not an expense, so it's not a liability, basically. Because you are giving back to us some of what the bottom line yielded, which was $19.1 billion. And I'm saying, Mr. Chair, we appreciate the capitalization of our group's shareholdings. Because when we look, Mr. Chair, some of us paid 50 cents for these shares. And this share value, I think up to yesterday, for $100. That was what it was trading on. So we appreciate the capital appreciation. We appreciate it. We also appreciate the dividend payments. Because I remember in 2003, what we got as dividend was so small that we were blaming management for their management style. But today, we are happy to see that that small dividend has reached 60 cents for the quarter. But, Mr. Chair, for the last quarter of the amount of 19.1 billion, we were expecting at least $1.20 for interim shareholding.
Mr. Staple, just a couple of comments, right?
Yes, Mr. Chair. Mr. Dennis.
The group makes a profit, right? And
Yes.
really the profits belong to the shareholders. And you're correct in saying that dividends are not an expense. However, when we make a profit, we have to make some decisions about whether or not we reinvest in the business or we give back the profit to our shareholders. In our presentation, certainly Mr. Hilton's presentations, and as we have done in the past, we have outlined a number of our strategic plans. And a big part of our strategic plan involves things, for example, like regional expansion. It involves us re-engineering our existing business. And these activities have to be financed. The decision that management makes is, in fact, how do we utilize the profits which are made? Do we reinvest in the business or do we give it back to shareholders? We have done our assessments, and we believe the best return for shareholders is to retain the amounts which we have retained, paying out the dividends which you are aware of, because we expect that the reinvestment will give you the kind of capital gains as you have been receiving over the past couple of years. So technically, had we been paying out more, we would have less capital and certainly less of an ability to do a lot of the things that we have done. And I'd say to you that the market has in fact expressed what I would probably say its support of what we have done. And that, I think, reflects itself in the fact that the NCB Group has probably the highest price to book among its peers in the market, one of the highest price to earnings ratio. So to some extent, I think the market has endorsed what we're doing. Clearly, as I said to you, we can pay out more, but certainly paying out more means we'll be sacrificing a number of the initiatives which we plan and which we are continuing to execute on.
Mr. Chair, through you to Mr. Cohen. Mr. Cohen, we appreciate what we have seen happening. We appreciate.
But it has to be financed via
Yes,
capital.
Yes. I appreciate that. We appreciate that.
So we have to make choices.
We appreciate that. But at the same time, for the one quarter, Mr. Chair, for the Christmas quarter, we could you could have helped us, or you could have given us a little bit more than what you gave us for that quarter.
Mr. Staples.
Hear me, Mr. Chair. Don't
Mr.
get me wrong.
Staples.
Don't get me wrong. You have to invest, and the investment is coming out of that bottom line. We hear you clearly. But we are saying to you, Mr. Chair, for that quarter, for that 1 quarter, you could have given us a little bit more so that we could feel a little bit better for that 1 quarter. Even that 1 quarter.
Mr. Staples,
Yes, Mr. Cohen.
can you hear me?
Yes, Mr. Staples.
So, I agree with you, I'm a shareholder too.
I know
So,
that, sir.
We, management and myself, had this discussion.
Yes,
But you see, we have to be guided by a framework.
yes.
And the framework that we have agreed to is the following. In our expansion, we should be guided by 3 Ds. Dividend should not be interrupted. So we can expand, but dividend should not be interrupted. That's D number 1. D number 2 is that there should be no distraction to the core business. And number 3, we should have no dilution. In terms of the latter, the last item, number 3, for NCB to have done what it did last year in terms of the acquisition of Clarion, and also have pre-funded the expected increase of shareholdings from 29.99% to 62% of Guardian, for NCB to have done that and respecting the item number 3, which is no dilution, it was a phenomenal job. And I assure you, sir, that it's done with the thought of having increased dividends on a turbocharged basis in the future. But we have to make choices periodically. So please understand that we are very sensitive to shareholders, but at the same time, we have to do what's right for the business, and opportunities don't come when we necessarily want them. When opportunities come, we have to be prepared to grasp them.
Mr. Chair, we appreciate. Don't feel that we don't appreciate. We appreciate what is being done. And when we look, Mr. Chair, at that capital outlay for Guardian Holding in 2017, 2018, it is a tremendous effort that you and your board have made. Good effort. And we foresee that with this business line, Guardian Holding, if you acquire that 50-odd% and become the major shareholder in that company, it augurs well for us as a country, as a group, and for us as shareholders. And I'm sure you are going to continue with your board members. You're going to continue this investment process. And I'm sure when you leave here and you have your next board meeting, you're going to say to your board members, okay, listen to what the shareholder says. Listen to what they said. They are in line with what we are saying and what we are doing. We are happy with the capitalization. We are happy with the dividend structure. But let us give them for 1 quarter, let us give them a special payment so that they can feel that we appreciate what they are saying to us as a board. That's all I'm saying, Mr. Chair.
Thank you, sir.
And Mr. Chair,
So, Mr. Staple, while you look, would this be your last question,
Yes.
sir?
Yes,
All right,
yes.
thank you, because we have a few other shareholders who
I
are
know.
waiting.
I know. Mr. Chair, in 2000, on the 30th of September 2002, there was a suit by the Staff Association, which is still pending. our staff, Mr. Chair, has done a tremendous job.
So you,
Why is it that this, whatever it is in the court, is taking so long so that our employees can be benefited from what ought to be given to them? What is taking so long with this?
so you're referring, I would assume, to page 282, Mr. Staple?
282, Mr. Chair. Yes.
Okay, thank you. So, and the question is as to why the matter is taking so long, to resolve?
To be settled, so that our employees who have done a significant job, a tremendous job, can get what is due to them, basically.
So,
Why is it taking so long?
I don't know that this is a question that is best placed for the organization to answer, because the question that you've asked really relates to why it is that the court process has taken so long for the resolution of the matter. Because the status of it is that it has been in the Supreme Court for a number of years, and as indicated in the note, the judgment in the matter was received only this year, and there are some concerns with the reasons for judgment, and so it is now under appeal. There has been much recent activity in it as it went through the trial process, but there were a number of years in respect of which there was very little that was actively happening in the matter. But that's not something that management can do anything about.
Okay, sir, thank you very much. And to my people in Junction, my people at Northford Boulevard, my people at Mandeville, to the board of directors of our company, we say thanks to you and ask you that you continue to do the work that you know best, which is managing this institution of which we are a part, and ask that you continue to do your best. May God's blessing be with you always. Thank you.
Thank you, Mr. Staple. I believe it is Mr. Golding. I believe you are next, sir.
Thank you, Mr. Chair. Mr. Chairman, members of the board, members of management, and fellow shareholders, I endorse the comments made by our previous speaker in commending the board, management, and staff for the awesome performance year ended 30th September 2017. When taken into context, this is the largest profit recorded by the organization since its inception in 1837. 1837. Accordingly, on hearing that announcement last year in December, I, like my fellow shareholder, said to myself, minimum would be $1. So rightfully did the math. The expectation would be at least anywhere between $1 and 1.25 cents. Mr. Chairman, I draw the meeting's attention to page 66 and the operating environment in which we operated, and all the stakeholders who benefited through the various means of expenses as detailed in the income and profit and loss statement. They survived. Inflation, as recorded at the end of the period, is 4.6%. And to endorse the statement and plea made by my fellow shareholder, I draw your attention to page 82, where it's shown that the dividend yield, 3.1% when compared against inflation, that's a negative 1.5%. So, I trust that the board and management will take that into account going forward. And we don't invest to make negative returns. And if you'll note significantly, the market sent you a message on the announcement of the highest profit made in this institution. The next day, the market, the share price fell. That sends a signal. So be mindful of that in going forward. Who knows? Had you declared dividend in line with expectation of the market and your shareholders, the market price today may be well in advance of where it is and more approaching the comparative figure of $1 US. We're still a penny stock, but we hope to move forward this year, 2018, by September, and become a stock to be reckoned with. So I commend it to management and the board to improve the dividend payout. We thank you for all the judicious deliberations and investment strategies. We commend you on that. But we as shareholders, what we take to the supermarket is dividends. So we're relying on you to improve the dividend payout and make sure that when compared to inflation, it's positive. Thank you very much.
Mr. Goulding. Good afternoon, sir.
Good afternoon, Mr. Chairman. And
So-
I'm happy that you remembered my name.
So Theo, as
Yes, sir.
you know, sir, there's one variable of that equation that we don't control, which is the stock price. And as the stock price goes up, the dividend yield goes down. We don't control how quickly the stock price rises. So obviously, the stock price is cheering the fact that the business is doing well, right? I don't think the stock price is looking particularly at the dividend yield. It's cheering that the stock price is doing well, and it is anticipated that it will continue to do the businesses will continue to do well, and hence dividend will eventually catch up. So we're looking at a point in time. If you had looked at this, took a point in time a year ago, it would have been a different yield. Am I right, sir? If you
Yes,
had looked
you
at
are.
it, if you had looked at it at the share price, which was about $80 in August, the yield would have been 20% higher.
But you're looking at the wrong thing.
Pardon
sir.
me?
What we want is more money paid out.
Yeah,
From
and by
the
the way,
reserve.
Prof just mentioned to me that the share price at the beginning of the year was $50. Therefore, the dividend yield was twice as much at the beginning of the year.
You have missed the message, you know.
No.
The essence of my message is that you must pay out more dividends during the ensuing year. Bottom line.
No, Mr. Goulding,
Yes, sir.
we are all motivated to do exactly that, but we have to look not on a quarterly or 1 year basis. We have to look at the business over the long run and do what's in the best interest of the business so that we can have, over a 10-year period, a reasonable increase in dividend payout, in dividend yield, over a 10-year period.
I'm
No.
talking about the immediate future. I need to see more in 2018. That's my message, and I hope it resonates in your ears as a major shareholder of this bank and take that into consideration.
We are
The
100% aligned, sir. Thank you.
Thank you. Good.
Yes, good afternoon, Mr. Chair.
Yes, sir.
Yeah, I just have one question here. My name is Michael Hendricks, you see?
Yes, Mr.
For-
Hendricks.
Yeah, for the scheme of arrangement, I would like to know how much it costs the group to implement it. For my record.
I'm sorry, Mr. Hendricks, we do not immediately have the figures available, but I can say that they were not material to the performance of the group. Had they been so, they would have been disclosed.
So you don't pay the money then?
No, that's not what I said, sir. They are not material to the performance of the group. In other words, you know, we represent our, we show our financial statements we're talking about, when we look at our expenses, we're talking about billions of dollars.
Yeah.
And the cost of the scheme of arrangement would not have represented anything significant among the billions of dollars of expenses that we incur during the year. Understand?
Okay, understand.
Hold a minute for me, please, sir, because we're not hearing you through that microphone yet. Could you get some assistance, please? Okay, hearing you now, sir. Go ahead.
Please, can continue?
Yes, I'm hearing now.
Garrett Parker. My take was not anything all that about than this. I'd like to know why we can't get this book before the meeting, before we come to the meeting. I'd support that we could get this book before we come to the meeting. So they can know what is and what it will be.
Oh, I'm sorry, sir. It is available before the meeting. It's you ought to have received a mailing. The mailing, I know that the mailing includes a compact disc, and if you prefer not to receive the compact disc, you are welcome to request a copy, which either you can collect from us or we can deliver to you each year.
Yes, man. So
Okay.
if I'm to get my copy, I'm living in Spanish Town. I could get it at the bank at Spanish Town.
So you can let the registrar at the desk outside. You can indicate to them how you'd like to receive your a print. You're saying you want a printed copy, yes?
I prefer the
Like that, the booklet, not the CD. So you can indicate to them how you'd like to receive it next year.
Okay, thank you. That's
Okay? All right, that concludes the question and answer section in respect
Chair.
of the audited
Mr. Chair.
financial statements.
Mr. Chair, before
Mr.
you
Chairman.
close off this section, Mr. Chair, before you close off this section, I would like to share some information with my fellow shareholders. In 2002, Mr. Chair, Mr. Hilton promised us that as we go forward, our expenses will be considerably reduced. I can share something with you, fellow shareholders and the board and employees. In 2016, we earned income of $66.1 billion. And our total expenses, inclusive of tax, was $51.6 billion. So we made a net profit of $14.4 billion. Of every dollar of that revenue that we earned, 78 cents went to expense and 22 cents went to profit. That was in 2016. In 2017, Mr. Chair, our total revenue was $78.1 billion. And our total expenses, inclusive of tax, was $59.4 billion. For every dollar that we earned in 2017, 76 cents went to expense and 24 cents went to profit. A significant improvement. the incremental amounts, that is the difference between 16 and 17, was $12.5 billion. And our expenses was $7.8 billion. For every dollar of that incremental earnings that we got, 63 cents went to expense and 37 cents went to profit. A significant achievement. And Mr. Hilton said he would, and he did. Thank you.
Thank you, members, for the comments and questions in respect of the audited financials. And so it is now left in respect of that item to vote on the motion that had been duly proposed and seconded, namely that the audited accounts for the year ended September 30, 2017, and the reports of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. Those in favor? Against? Chairman?
I declare the motion carried.
The next item on the agenda is the declaration of dividends, and the resolution that is being suggested is as follows: that the interim dividends per stock unit of 60 cents paid in May 2017, 60 cents paid in August 2017, and 60 cents paid in December 2017 be treated on the recommendation of the directors as the final dividend for the financial year ended September 30, 2017. Could a member please propose the resolution? Either louder or using the microphone, please, sir. Thank you, Mr. Clark. And can we have a member second the motion? Yes, sir? Thank you, Mr. Barton. Those in favor, please.
If you don't mind,
There's a question on the
there is indeed.
resolution?
Yes.
Yes, sir.
My name's Arthur Ellison. And here it is,
Yes,
I'm
Mr. Ellis.
recognizing that we've paid dividends every 3 or 4 months. Is that the,
The norm is to pay every quarter.
right? So I'm wondering why is it we have payments on, in May, in August, and in December?
Yes. So there wouldn't have been a payment for the... Right. So there wouldn't have been a payment for what would have been the first quarter of the previous financial year, because at that time the reporting entity would have been National Commercial Bank Jamaica Limited, and the scheme of arrangement then ensued. So that dividend gets declared by
that clarifies
NCBJ.
it quite well, because my expectation is that we were paying dividends quarterly.
Yes, and the
So-
dividend was of course paid,
Yeah,
but that was
on
paid by
NCBJ.
what now is a subsidiary of NCB Financial
I
Group.
appreciate it.
You're welcome. All those in favor? I'm sorry, it has to be by a show of hands, not by, not by voice. Against? And Chairman?
I declare the motion carried.
We now move on to the election of directors. Article 94 of the company's Articles of Incorporation provide that 1/3 of the board, other than the managing director, and that is our president and group chief executive officer, and the deputy managing director, that is our group chief financial officer and deputy CEO, or if the number of members of the board is not 3 or a multiple of 3, then the number nearest to 1/3 shall retire from office at each annual general meeting. The directors retiring under this article are Mr. Wayne Chen, Mrs. Sandra Glasgow, and Mrs. Sanya Goff. Mrs. Sandra Glasgow and Mrs. Sanya Goff, being eligible, offer themselves for re-election. The proposed resolutions are therefore as follows, and we take them in turn. The first resolution will be taken in respect of Mrs. Sanya Melina Goff. Mrs. Goff was not feeling well during the meeting, and so she had to step out. But we take the resolution nonetheless, and the suggested resolution is that Director Mrs. Sanya Melina Goff, retiring pursuant to Article 94 of the Articles of Incorporation, be and is hereby re-elected. Could a member please propose that resolution? Yes, sir. And Mr. Barton. And may we have a member second the motion? I'm seeing a few hands. Mr. Leon Francis. Francique. Thank you. All those in favor? Against? Chairman?
I declare the motion carried.
Second resolution is in respect of Mrs. Sandra Glasgow, and the suggested resolution is that Director Mrs. Sandra Alicia Carol Glasgow, retiring pursuant to the same article. Just a minute for me, please. We need to take a correction to the previous resolution. And I'm going to take the resolution again. The article is correctly represented in the notice of annual general meeting, but when I was reading the resolution, I read the wrong article number. So I will take the resolution again in respect of Mrs. Sanya Goff. It is that Director Mrs. Sanya Melina Goff, retiring pursuant to Article 95 of the Articles of Incorporation, be and is hereby re-elected. The resolution, Mr. Barton, you still wish to propose that resolution? Thank you. And Mr. Leon Francique, you're seconding the resolution? Thank you. And those in favor? Against? Chairman?
I declare the motion carried.
Thank you. And now the resolution in respect of Mrs. Glasgow. The suggested resolution is that Director Mrs. Sandra Alicia Carol Glasgow, retiring pursuant to Article 95 of the Articles of Incorporation, be and is hereby re-elected. Mr. Golding was quick out of the blocks, and so he is the proposer of the resolution. And Mr. Staple is an anxious second. All those in favor? Against? Chairman?
I declare the motion carried.
We now therefore move on to director's remuneration. And the first of the resolutions to be considered, once duly moved, is that the directors be and are hereby empowered to fix the remuneration of the executive directors. Can we have a member propose that resolution? Yes, Mr. Clark. And a member to second the resolution, Mr. Barton. All those in favor? Against? Chairman?
I declare the motion carried.
The second resolution is that the total remuneration of all of the directors combined, other than the executive directors, for the financial year of the company ending September 30, 2018, be and is hereby fixed at $25 million, which remuneration may include such share incentive scheme for directors as may be determined by the board. Could a member please propose that resolution? Yes, ma'am? I'm sorry, I didn't. Thank you. Second? Mr. Barton. And could we please have the vote on the resolution? I'd ask chair members to indicate their support by raising their hands. And any against? Chairman?
I declare the motion carried.
Now we come to the appointment of auditors. Mrs. Price Waterhouse Coopers have agreed to remain in office, and the company proposes to retain them. And so I'd ask someone to propose the resolution set out in the agenda. Couldn't be. Yeah, allow me to read it first, please. That Messrs. Price Waterhouse Coopers, having signified their willingness to serve, continue in office as auditors of the company until the conclusion of the next annual general meeting at a remuneration to be agreed with the directors. Now is the time. Yes, Mr. Golding. And second, Mr. Hendricks.
Comment?
I'm sorry? Yes, sir.
I identified myself as Arthur Ellison.
Yes, Mr. Ellison.
And I was hoping that Mr. Reese would be listening to the comment that I'm going to make at this time.
Well, he is here, so I'm sure.
Very good. I'll speak louder if I'm not clear enough, Mr. Reese.
Quite clear, sir.
Frankly, I'm depending on you as our all of our fellow shareholders to maintain not only the close watch that your report indicates that you've done on the operations and the proceedings of our company. But even more than that, I'd ask you to bear in mind, not only on the basis of your professional skills, but also on the basis of the knowledge that not only are we looking for dividends, we're looking forward to the constant appreciation of our company's values. And that is something which I believe the auditing firm tends to help the directors not only to keep their eyes on it, but also to seek areas where improvement of the company's assets and profitability can be achieved. I mention this because you know, and I know, that major companies have grown and then collapsed because they had differences with their auditors, with their external auditors, and perhaps the auditors accepted things which maybe they would have under other circumstances, but they took the directors or they took the company's decision on the matter. And that is something which I believe not only your own integrity will prevent, but also I just want for you to remember that a lot of us are depending on you to be sure that not only is the satisfaction worked out, that is a good association with the company, but also with providing the benefits that we as shareholders look forward to their achieving. I thought I'd mention it so you know that we're depending on you.
Thank you for your comments, and your comments are noted. We take our responsibility to shareholders very seriously, and we execute the audits consistent with the auditing standards which require a high level of independence and integrity. With respect to helping NCB to achieve its goals and to maximize the value of its assets and therefore shareholder value, there are opportunities for us to work with NCB to assist them in some of their strategic imperatives. However, those are restricted by our independence constraints. We don't want to end up in a situation where we are participating in management initiatives that would impair our independence and therefore cause us to be perceived as being less stringent in the execution of the audits. Nonetheless, we remain tapped into NCB and its initiatives, and you can rest assured that management is very proactive in discussing emerging matters with us so that they can get our perspectives on the various things that are on the horizon. And Dennis can tell you that Dennis and I meet very, very frequently to discuss all and sundry in relation to NCBFG.
Thank you, Mr. Rees. It's very good for all of us to know that your independence is very important in all of this.
Yes, sir. You're most welcome.
Thank you, Mr. Ellison and Mr. Rees.
Would you sign off on an audit of a company which provided a loan 9.4% per annum and the interest
I'm
exceeded
sorry,
profit?
sir. We need to have your name if we're to
Oh, all right.
if we're to record your question.
My name is Lee Perkiwart, right? There's a particular public company, no?
No, we didn't get the name. You said it a little too fast for me.
All right, my name is Lee Perkiwart.
Liepert Ewart.
Yeah.
Yes, sir.
There's a particular public company, no? And their incumbent provided a loan of 9.4% to its subsidiary, and that interest exceeds the profit, to the point that a particular shareholder that brought in that company to court that the directors has authorized such transactions, and the auditors, not you, but an auditor has been auditing the book. What do you think about that transaction?
Sorry.
I'm not, Dave, you're going to protect me or?
Well, perhaps.
Thank you, Dave.
The challenge that I'm having, sir, is the motion that's on the floor.
Yes.
Because the motion is for the appointment of the auditors, and the question, it seems, relates to an audit activity related to a different
company. But I'm saying now,
The-
would you sign off
No,
on
but-
a company, on an audit of that nature, and allow it to be a public company and agree with it? Would you, Mr. Rees?
Dave is conducting the meeting, so is this a question that I should be responding?
Well,
to-
the chairman is conducting the meeting. I'm supporting him,
Thank you for that
but
clarification.
I'm having a concern because I'm not seeing the relevance of the question to the.
I can discuss with you after the meeting.
To the yes,
I discuss with
because
you
I'm
after
not
the
seeing the relevance of the question to the motion that's on the floor. So can we therefore have the vote on the resolution? All those in favor, please indicate by raising hands. All those against? Chairman?
I declare the motion carried.
Thank you, sir. We are now at the point where any other questions or not specifically in relation to one of the resolutions that has been circulated may be taken. Just before we do so, I do want to include an apology to Director Mitchell and to shareholders in the annual general report that was circulated electronically. That's the one that was sent on the CDs. It has an incorrect period for his length of service, and the correct period should be 2 years. We've sought to correct it in the printed versions that we had available to us, and so anyone who collected a printed version today should have that correction, and the version that's online also has the correction. All right, so we're on to the questions and answers on diverse matters. And I'm afraid I didn't see who took the microphone first, but let's start in the middle.
Good morning or good afternoon, Chairman, Board of Directors, fellow shareholders. My name is Leon Francique, and I'm both a long-standing client and shareholder within the group. And my concerns are as follows. So I came to this meeting with the intention of hearing a more pointed or detailed outlook of the plans for 2018-2019 for the group. But just looking on the interim results, it appears that the group will seek to match last year's or exceed last year's record profit by acquisition, right? Because in the interim results, Mr. Cohen referred to net profit growing by 28% or $1 billion, right? But at the same time, there was a gain on acquisition of $1.5 billion. Therefore, on a normalized basis, profit actually fell about 15%. Can you comment on this, Mr. Cohen? So it's two questions, really. One, am I correct in saying that for 2018, we're going to grow by acquisition? And two, did profit actually decline on a normalized basis in the first quarter?
Yes. All right, first, you are correct in terms of, well, not on a normalized basis, but certainly our operating profits would have declined period over period. And I had mentioned earlier in the presentation that there were a significant number of one-off charges in the quarter. I think I made specific reference to the redundancy costs in the quarter. There were also significant staff payments related to incentive payments or profit share, which were charged in the current quarter, but clearly related to the quarter, related to the previous year. I had also mentioned that our general insurance subsidiary had proactively decided to clear up a large backlog of claims, and the charge for the quarter was about $1.1 billion in relation to the normal quarterly charge that have been in the region of $600 million. Those are just a few of the items. The one-off charges that I refer to actually exceeded the gain, the one-off gain on Clarion, and on a normalized basis, we still would have been ahead of the prior year.
Okay, so as a shareholder, I appreciate our initiative with regard to expense control. However, I also have a concern as both a shareholder and a client in terms of these redundancies seem to be, at least on the client end, affecting the processing time of our loans. I mean, I've been taking out loans from NCB for a number of years, and last year was by far, and this is at the latter end of the year, in December, the longest processing time for a loan I've seen. And it appears to me, and you can clarify whether this is the case or not, that there seems to be an undermining of staff that is affecting the processing time of loans, because my loan took about four weeks to process from start to finish, from being provided a checklist of things to bring in to actual disbursement. And this is disturbing. I mean, Mr. Hilton spoke to customer obsession and a need for customer satisfaction and driving innovation. But as a market leader and a bank on the cutting edge of technology, it seems as if we're underperforming, especially in terms of personalized service, because having a credit history with the bank, one would think that it would lead to a more expedited or tailored experience in terms of getting loans. But my experience thus far has not been the case. So can you comment on this personalized experience, and can you comment on the impact of staff changes in terms of the processing time on these loans?
Yeah, I think we had actually commented on the staff changes. I think in my presentation I made reference to us looking at our operating model. The challenges that you've outlined are in fact is among the factors which is driving the shift in our operating model. We have made reference to digital as in fact being a core initiative that we're pursuing. And the drivers for those initiatives is in fact exactly what you're describing. We realize that our historical way of doing things is not meeting the expectations of our customers. And now the specific case you've described, it may very well have been an anomaly. I'm not sure that is the norm, but certainly we are not happy with what the norm is. And we expect that a number of initiatives that we have in place now, you will, in time, see a significant improvement in the turnaround time of those transactions. As a matter of fact, secured lending is in fact a priority of ours. As a matter of fact, it is in fact the first agile lab, so to speak, one of the first agile labs. We're looking at unsecured loans, secured loans as two key components of processes or journeys that we want to reimagine. And as I said to you, if you give us a little time, I think we expect that you will see a major improvement in the turnaround time of such transactions.
In terms of secured loans, I like that you mentioned that, because a home loan in particular is the very definition of a risk-free asset, and yet the rates do not reflect same. I mean, treasury bill rates declining down to below 4%, and even recently you announced a 7.99% on joint mortgage with NHT. That rate does seem quite high, given the low risk relatively involved in a home loan versus any other kind of loan. So do we plan for further adjustments in that rate, or will that be?
Well, we are constantly looking at our rates in relation to market, in relation to the risk factors that we assess. I can't make a commitment regarding cutting the rates. But what I'll say to you, we will take a look, as we usually do. We pride ourselves in being competitive. As the rates, as market rates decline, you will see an adjustment downwards in our lending rates, which will include our mortgage rates.
All right, and finally is a question I asked the Minister of Finance last week, but he was unable to answer, so I'll ask you instead. It speaks to your relationship with him, actually. So, as a shareholder, I want to know, what is our bank's position on the Minister's proposed trade-off between a lower asset tax rates and the interest rate reductions by the bank? So we know as a shareholder that if you were to reduce interest rates you charge on loan, it would be in less interest income and by extension less profit and less dividends for us. But at the same time, the minister is willing to give up some asset taxes from the bank for you to facilitate these lower rates, which would in turn facilitate some significant growth in the economy, which should be of particular interest to Mr. Chin, given his position on the Growth Council. So,
well, what I'd say
what is our position exactly?
Well, what I'd say, the devil is in the details, right? We have received no communication to that effect. So we haven't been able to assess or to model what is the idea, so to speak. The board nor management haven't been able to deliberate on that. As soon as something is put to us, we'll certainly take a look. And I think that would be the appropriate time for us to provide feedback.
Thank you.
Hi, afternoon. Stephen Jackson, a shareholder. I am just trying to get an update in regards to the offer to acquire additional Guardian shares. In particular, why is NCB trying to get up to 62% rather than 65, 67, 75, 80? What is so magical about 62%?
Well, I mean, that is really a capital allocation discussion, right? We have looked at the capital of the NCB group, and we have made a decision about the quantum in relation to our total capital that we wish to commit to that particular investment. And it works out that we believe that 62% is an appropriate investment. It gives us the control that we want. It gives us the kind of capital allocation to that business which we feel comfortable with. 100% would be a far bigger allocation, which we believe is probably not the best for us. We can achieve what we want to achieve with that acquisition at 62%. I think those are the basic factors which actually drove that decision.
And I'm not an accountant, so if you get 50%, then you will subsume the revenues of Guardian into NCB, and then it will move from being a $45.8 billion in revenue company, that is NCB Financial Group, to being much larger.
From an accounting perspective, the revenues and assets of Guardian Holdings would be added to that of the NCB Group, and then there would have been a deduction for the minority interest share.
Provided you get 50.
Provided we get in excess of 50%.
And the functional currency, if that happens, would be, going forward, would be Jamaican dollars, or?
The functional currency for the NCB Financial Group is and will continue to be Jamaican dollars.
Okay, and do you have any comment in regards to, the offer price? Apparently, shareholders in Trinidad are not very pleased with what's being offered to them.
As my legal counsel. I don't know what I can say. What am I allowed to say?
Are you a shareholder from Trinidad?
No, but I think you have some shareholders from Trinidad here. But,
So you're your spokesperson?
No, of course not. Any comment on the price? And part of the issue is that they are concerned that proper legal process was not followed in offering a different offer price to minority shareholders than was offered to the key shareholders in 2016. Can you guys comment on that?
All right, that we can comment on. So certainly, as you would imagine in a transaction of this size, both the selling shareholders and ourselves would have been represented by experienced counsel in Trinidad and Tobago, because that's the law that governs the transaction. And based on the advice, certainly, that we received from our counsel, and supported by the provisions of the bylaws that were shared with us, the manner in which the transaction has been executed is legitimate. We know that there has been quite a bit of discussion around a particular clause in the takeover bylaws in Trinidad and Tobago, and there are actually two relevant clauses 8 and 13 in those bylaws that have some bearing on these types of transactions. And when one looks at paragraph 8 of the bylaws, one sees that if you have two transactions taking place within 90 days of each other, then that affects the issue of what price must be offered in the second transaction. That provision doesn't apply when we are having the offer being made after that 90 days has passed. And this is a case, obviously, in which well over a year passed between the acquisition of the initial amount and the second transaction that occurred. That hasn't occurred. The offer being made as it was in December of 2017.
I follow you. Thank you.
You're welcome.
Good afternoon, Mr. Chairman. Good afternoon,
Yes,
Mr.
Mr.
Chairman.
Hendricks. Yes, go ahead, Mr. Hendricks.
Yes, my name is Michael Hendricks. I have three matters to bring to your attention, Mr. Chairman, which are very paramount to me, to myself. I think I've brought one and about 4 consecutive years to you without any redress. but this one is about some shares in Cable and Wireless, which you know Cable and Wireless are going to go private. In about 1993, I purchased some shares in Caribbean Steel Company. And in 1996, I brought it over to Edward Gale, which is now Capital and Credit Merchant Bank. Capital Market, right. And I asked one Mr. Mark Walters. These shares was in certificate form. I had another account there in a portfolio form. But this one that I brought in was some Caribbean Steel share in certificate form, in which I asked Mark Walters to sell for me. A few days I went back and he told me that was done. Prior to that, he left and go to Darren Bunting and Golding. And he asked Miss Claudette Crooks, who is now at Money Masters, to hand me the certificate in Cable and Wireless. She said I should come back a few days' time. I went back, she leave also. And I spoke to a lady there by the name of Miss Robinson. Miss Robinson indicated to me that the shares them was sold. My Caribbean Steel was sold about $3 million worth. A Caribbean Steel share was sold, and it was, and they bought Cable and Wireless for me. But she told me that I will not get them because NCB lost a lot of money and I have to stand some of the burn, which I don't know why. Anyway, recently I went over there and I spoke to Miss Peter King. Miss Peter King went into some documents and things, and she going to the portfolio. I told her that it is not the portfolio, it was in certificate form. Anyway, she indicated to me that I have to get a lawyer. I don't know why, you know. The other thing now, Mr. Chairman, I'd like you to look into that matter for me, Mr. Chairman, because you know Cable and Wireless is going private. And I know you don't want your bank to have my order in cash, in which I am very in need of it. Next thing, Mr. Chairman, you purchased a truck for me in 1996, NCB.
For you, you said, or from you?
Yeah, for me.
For you.
Yeah. I borrowed a loan of $361,000. In 1996, I had the truck for about 6 months. I used to convey goods. I was a haulage contractor at the time for HD Apple and Consumer Goods. About 6 months after, I started to make some loss, and I decided to sell the truck, which I did with 2 contracts, and I gave a check to NCB for $850,000. I brought in a check to NCB for $850,000. I brought on that loan to 200 and something thousand. NCB was supposed to credit my account 600 and something thousand. Until now, no money is into my account. NCB sent that account to Jocelyn, Jamaica. Indicated to them that I owe $1.7 million, in which way they say I have never paid any money on the account. Jocelyn, Jamaica sent me a letter.
Mr. Hendricks.
Yes.
All right, I don't know that we can get into the details of each of your individual and personal matters, some of which have been raised at previous annual general meetings.
Yes.
So can you move into the third one, please? You said there
the
were
third
3.
one is an accident that I have with United General Insurance, which I think the manager is here. I had an accident there sometime in about 1994.
What do you mean you had an accident there?
One of my vehicles.
You mean on the building?
No, one of my vehicle, one of my bus. I used to operate some bus in those days. One of the bus met in an accident with a car. My bus was a fiberglass bus. You know fiberglass, mister?
Yeah, but I don't know that we need the details about the bus. We just need to know what the issue is.
Well, apparently, the mechanic, the documents that I got from the assessor for the bus to be repaired, that was changed there.
I'm not understanding, sir.
I say your United General changed the assessor report and got a different assessor report and put in place of the one that I sent in. I sent in one for 500,000 and they changed one for 10,000. And they put one there for $10,000.
How long ago did this happen, sir?
The accident was about 1994, 95.
And you complained at the time?
Yes.
And did you complain to it wouldn't be the Financial Services Commission at the time. I think it would have been the Superintendent of Insurance.
Yes,
Maybe you should take up the issue with the
I
FSC.
brought it to the Superintendent Insurance and they sent me back home.
So here's the issue, Mr. Hendricks. I've noted the issues that you've raised. I think there are probably other fora in which you would need to raise them, because this meeting really is for the purpose of raising
it's
matters.
any other thing.
No. It is
Any other
for
business?
raising matters that are relevant to shareholders of the company
But I
as
am a
a
shareholder.
whole.
I am
Not
a
to
shareholder
you
of the company.
specifically. We have over 30,000 shareholders. So thank you for sharing the issues that you have raised. I think there are going to have to be some other opportunities that we're going to have to explore to close any of them that have not already been closed, because I know that at least one has already been closed.
No.
And so you can perhaps
No money
take
is
it up
still
with.
in, no money is
So,
into my
Mr.
account,
Hendricks,
mister.
we're going to have to say that the chairman, I'm afraid, had to leave. The lead independent director, Professor Wint, is now in charge of the meeting and is indicating to me that we need to take the next question.
Okay.
Dennis Martin, shareholder.
Yes, Mr. Martin.
I am sorry that the chairman is not here because my specific request is pointed to him. But however, I wish to endorse what has been said about NCB, where the bank is now, where the company is now, and where it is going. It is under what I call it committed and inspirational leadership. But there's one thing, a request that I'd like to make to the acting chairman, or we sitting in for the chairman now, is that NCB share on the stock market is becoming very illiquid. And I'm sure that I'm speaking on behalf of the shareholders here this evening, that we would like Mr. Chin to use his Midas touch to do something about maybe considering a split so that the stock price might get a little more liquidity. So this is the request that I have to make going forward. And I'm sure that every shareholder here this evening will agree with me that the stock price is becoming out of the reach of many people. And with a little boost, magic can perform. Thank you.
All right, thank you, sir, and we will ensure that those comments are put forward for consideration.
Chair?
So we're going to take just the two more, the gentleman who is standing now, and Mr. Golding, who is already at the microphone.
you.
All right, three.
Chairman,
Mr. Golding.
just a matter of follow-up on matter recording on page 231 of the minutes regarding dormant accounts. Mr. Hilton had promised to look into the matter, and I'm sure decision was taken through the system. And could he report on the status and policy now of NCB regarding such accounts? And also, secondly, a comment for management and the board to bear in mind that there needs to be a balance in terms of the cutting of staff and the ability to deliver the service. Because if you move around to the various branches, you see that the customers have to wait in inordinate lengths of times to be served. So this is sending a message that there needs to be a better balance to make sure that we have our branch network adequately staffed to meet the demands of the customers. We can't go there and spend hours to either open an account or to do a transaction. So there's need to be for balance, and I ask that management will take that into account going forward. Thank you.
All right, thank you, Mr. Golding. In relation to the update regarding the fees are no longer charged by virtue of accounts becoming dormant. And in relation to this, the second issue that you raised, I believe that Mr. Cohen actually spoke to it in his comments earlier, but certainly that balance is always taken into account.
There was in the minutes a follow-up to ask for a refund for the senior citizens and youth. Those accounts were charged out and closed, and so that aspect of it.
Oh, I see. So, if there is someone who has closed an account, yeah, I think that's something. Yeah, that would someone who is making such a request, I believe, can approach the branch. Yes, for it to be considered. Am I correct, Mr. Booth? He says it's within a certain time frame. Oh, I'm sorry. Mr. Booth, you want to come up and answer?
So in relation to that question, customers whose accounts would have been closed within, I think it's 7 years, are able to visit our branches and ask for a refund and the account reinstated, or a new account opened accordingly.
Thank you, and congratulations on that milestone.
You're welcome, sir.
All right. We're on our
I am
second to last.
Peter Williams, Peter Xavier Williams,
Yes,
ex-JDF. I am proud to be a member of the NCB group from its inception. And by the grace of God, I've been able to accumulate over 12,000 shares. And so I wish to give thanks. But talking about civic pride now, we learn to dance at home before we go abroad. I've noticed that at headquarters that there are a number of flagpoles up there, and I've been talking about this for the past 10 years at our annual general meeting. There's not even a misguided kite frame that ever land on one of those flagpoles. And I've been talking about this, that there's no national flag flying on these flagpoles, and yet we have National Commercial Bank. National, we're talking about civic pride. That we need competition even at my bank. My bank, Matilda's Corner, the American flag is always there. And we're facing that, and there's no competition. None of our flags have ever been seen flying up there in my bank. And I've been talking about it for the past 10 years, and nothing has been done. And so I wish to bring to your attention again, sir, so that we might see that. And I was walking down the aisle, and one of your staff members asked, what is this all about? Is this connected to NCB? I said, no, this is the Jamaica Legion's poppy peel and the badge that is in it. And I wish to remind members here that the red poppies is the sacrifice that our soldiers have made so that the freedom we all enjoy today it's a result of the sacrifice they've made to make us free today. And so I wish to just remind members to support our Jamaica Legion members, as in the memory of which we have served so faithfully and well. Thank you.
Thank you, Mr. Williams.
Yes,
Yes, sir.
Lee Pertewart, are you hearing me?
Yes, I'm hearing you, Mr. Ewart.
I'm just reading from what has appeared in today's Financial Gleaner. It said that NCB wants court battle against a software developer, and it's $8 billion.
No, not hearing the
Are you
question.
hearing?
Yes, I'm hearing you now.
Appeared in today's Financial Gleaner, page 4 and 5. Now but against the software developer. Is it 8 billion Jamaican are going to appear in the books as profit, or is just an estimate? Or is the developer appealing this case?
This is the HMA. This is the HMA.
Yeah, I think the 8 billion, I think, is the claim that the person was actually making. But the matter was rejected by the court.
So why do they put it in as if the bank, the person at the bank has won the case, and they are like to get that money? That's
No. The person is claiming that from the bank. And the claim was not successful.
So the person was claiming against the bank, and the claim is not successful.
Correct.
Yeah.
So if the bank is going to charge for attorney fees for time or whatever against that person?
All right. So I think I understand the question now, sir. So in respect of the treatment of the claim itself, my recollection is that we had always assessed that the claim was unlikely to succeed, and so we didn't make any provision for it. And therefore, on succeeding in the claim, it would have no impact on the current financials. In respect of the question of legal fees, as is the norm, when we were successful in the claim, the court did award costs to us, and we would be pursuing the recovery of those costs. If those costs are recovered, they would result in a positive, although not material, impact on our net income.
So you don't know what is the quantum of the
No, that falls to be either agreed between ourselves and the claimants, or assessed by the court.
Okay. The other question that I share with, I read it last year to Mr. Hilton. I said to him that at the time the share was trading at $50. I said, if the share reaches $80, what about a stock split? It was raised last year when the scheme arrangement will be implemented. And I'm sure that the share had surpassed at $80. And I'm happy that the other share had bring it up. We would like to see something done by the end of March, because this shares had now traded at $107. And chances are, after the close of the Guardian transaction next week, we are likely to see shares. How many people are going to buy the shares at $110 per share? You need $12,000 to buy a minimum of 100. And how many persons going to the market for the first time is willing to gamble $12,000 and over?
So, Mr. Ewart, I don't know that I like the categorization of purchasing our shares as a gamble, but the question, a similar comment was raised earlier, and so we will certainly have.
Yeah, it was raised earlier, and we will take a look at it. I'm going to make a few comments, though. The point was made earlier regarding liquidity of our shares, right? That is something that I have investigated, right? And the issue regarding liquidity of NCB shares is not born out of NCB shares being expensive. It is born out of holders of NCB shares not willing to sell them, right? And I think we need to be very careful about the concept of liquidity, right? That's one point I want to raise. The second point I want to raise is that we also need to be cognizant that NCB shares are traded not just on the Jamaica Stock Exchange, right? It is traded also on the Trinidad Stock Exchange, right? And on the Trinidad Stock Exchange, it is not one of the higher priced stocks, right? As a matter of fact, there are very few stocks on the Trinidad Stock Exchange which are cheaper than NCB stock. and NCB stock on the Trinidad Stock Exchange is now at an all-time high. If I recall, it has recently has been as high as $6.75.
Yes, Mr. Coy, but that raises
no.
the same question of the price. It means that's going to be even higher. And the completion
No,
of the
no.
Guardian transaction, I can expect the
No, no.
share to go higher, and then it's going to be more harder. If you don't split the stock, it's going to be more difficult for new people to purchase the stock. That's what I'm trying to say, because if at this point it's so expensive, Trinidad, and they don't close the Guardian deal,
No.
what is going to impact at the end of March?
We'll give you feedback on it on another occasion, but it is not something that we're unaware of, and I was attempting a while to give you a few points, but as I said, on another occasion, I'll share some thoughts.
So, Mr. Cohen, you are saying now that last year when Carrier share reached 100, they split it 10 for 1, and they were saying the share will become illiquid. You are saying that NCB don't see the same facts affecting its organization right now, in terms of the price? Watch and see in the next 6 months if you don't split it, what is going to be the
No, we'll take a look at it, and if we see there's value in a split,
it will
certainly
increase
act
in value. When you add that Trinidad powerhouse to the books, what do you think? What the impact of that $30 billion profit? $30 billion divided by 2.5 billion is how much earned per share? $12.50.
No, noted. Noted. It was not a comment about there will be no consideration of a split going forward.
Yeah, you need to consider it quick. We are not wanting you wait until 3-4 years time and we want something early
Okay,
because
okay.
we don't get enough dividends. So if you get a stock split, it would give us a better deal. You know, we don't have to ask for so much dividend because
All right, thank you, Mr. Ewart, and thank you, shareholders, for your contributions to the meeting. I'll now invite our lead independent director, Professor Alvin Wint, to bring the proceedings to a close.
Just want to thank you, shareholders, for your contributions and your patience. I think it's been a meeting where we've had a very useful discussion. And so at this point, I'd like to declare the meeting closed. I think refreshments are available. I see that the national anthem is there again, but I don't think it's for us. Okay? So we're closing at this point in time. Refreshments are available. Thank you very much, everyone.